Hello, good morning, everyone. Welcome to today's webinar on managing vendor risk and related frauds, hosted by IIA India Delhi Branch Women's Forum. We are delighted to have Mr. Mukesh Gupta as our esteemed speaker for today's session. So today in this webinar, our speaker will share valuable insights on managing vendor risk and addressing frauds that are associated with vendor relationships. So whether you are an internal auditor, risk manager, compliance professional, or anyone interested in vendor risk management, this webinar will definitely going to be very highly informative and engaging. And you will gain a comprehensive understanding of challenges, the best practices in vendor risk management, and learn how to proactively prevent and detect frauds that may arise from vendor relationships. We encourage you to actively participate, ask questions, and engage in this meaningful discussion throughout the sessions. All of you can put your questions in Q&A section, so that it will be taken up towards the end. I hope this webinar, being fifth in the series for the Super Sixer series, which we are running for last 5 weeks, one more week to go. You are gaining a valuable insight throughout, learning throughout these sessions. Without taking much of your time, I'm handing over to Mr. Mohit Gupta for introducing the topic and the speaker for today's session. Over to you, Mohit.
Thank you so much, Sana, and very good morning to all the attendees and the panelists for this session today, which is going to be very learning experience for all the attendees, I'm sure. As far as this today's topic is concerned, I think this is one of the most relevant and very critical topic for the organizations these days. Now, as we understand that the world is changing fast and with the digital revolution, and this is opening up new opportunities for the organization. With these new opportunities comes more and complex challenges. And accordingly, internal auditors need to modify their approach and adapt to the new rules of the game. These days, take an example, we're talking about more and more automation of the business cycles, wherein the vendor onboarding and the payments are being processed without any human intervention. So you can imagine if the right controls are not built in, what could be the quantum of a risk which can organization have to face. Now, in such situations, managing vendor risk effectively is amongst the top priorities of the board. While they endeavor to ride on the wave of digitalization and expand exponentially in the minimum possible time. So vendor and third-party risk, if not managed effectively, can cause huge financial as well as reputational impacts for the organization. So in today's session, our learned speaker is going to cover some of the critical aspects of the vendor landscape, related risk, possible frauds which can happen in this area, actions required to mitigate such risk effectively, and how do we deal these scenarios and red flags while we are conducting the internal audit engagements. So let me introduce today's speakers for the session, CA Mukesh Gupta. Honestly, I will fall short of time if I start elaborating on the extensive experience of Mukesh Gupta, who has kindly accepted our request to enlighten the participants with his words of wisdom gathered by him during his extensive experience of working with large consulting organizations. Mukesh is a chartered accountant by profession. He's also a CIA, CISA, and CFA certified, with more than 22 years of experience in internal audit, risk management, corporate governance, and financial management for various large and complex organizations, more specifically in banking and financial service sector and real estate sector. Now, he specialized in the field of internal control, governance, risk management, SOX, BPR, enterprise risk management, and private equity investment advisory. Along with, he's also serving as a member of Board of Governors on the Institute of Internal Auditors, Delhi branch. So many thanks, Mukesh, and I welcome you to take this session for today on managing vendor risk and related frauds. Thank you so much. Welcome, Mukesh, and you may please start the session.
Thank you so much, Sana and Mohit. It is my pleasure to participate in IIA session and speak about one of the most important, I would say, the topic which is about the vendor risk and what can it, result, from a fraud standpoint while we deal with the vendor. Let me just come straight to the presentation, and thank you so much for the participants also to join in on Saturday morning, which really indicate that we are very keen to learn in today's volatile world. Unless otherwise we are student for life, we will not be successful, irrespective of the number of experiences we would have gathered. Example, let's say for me, if I stop reading today, I will be redundant in about 2 years from now. And this applies at all juncture of our life. And hence, it's important that we keep learning from each other and enhance our wisdom in terms of performing the job, whatever we are doing. Okay, let's just go to straight on the agenda today. We will be talking about the vendor landscape, vendor risk management. What are some views from the leading institutes who are guiding us as a professional? What actions are required to effectively manage third-party risk? What are some of the typical fraud happens in the vendor space? And what are some of the red flags which we got to be careful about while we do internal audit? Those red flags will give us an indication, and then indication, if analyzed it well, might lead to an investigation which would unearth the fraud. And towards the end, we can have Q&A. You can keep, dropping your questions in the Q&A box, and we will address towards the end. So with that, we can get started. The only request I would have is, unless otherwise you would like to talk about it, if you keep it your microphone on mute, it will be good. I mean, there will not be any disturbance to the session. So with that, let's just get. Now, if you look at the slide, it talks about that organization today is absolutely kind of covered in all direction by the third party. In any function you pick up, logistics, sourcing, legal, technology, insurance, marketing, human resource, facility management, customer support, selling and distribution, franchising models, etc., etc. So pretty much you can't think of today an organization, big or small, who would not be dealing with service provider. It could be, for a very small organization, it might range from, let's say, 10, 20 service provider. For a very complex organization, it could be as high, from a number of vendors perspective, it could be as high as about 5,000. And if you were to talk about the unique services on which vendor or service provider supports are being availed, it might be in the range of about 200, 300. So that's the way we are operating. Technically speaking, all of these, you may theoretically decide to keep it within the organization. However, it is not feasible for two reasons. Number one, organization would always like to focus on core business and not like to build capabilities or sub-organization within the organization. For example, for, let us say, a call center management or a customer service or logistic arrangement, transportation system, and the marketing, advertisement and marketing, technology related matters, etc., etc. So it is always beneficial for us to avail those services from outside world, because they are doing it for living, and therefore their ability to provide cutting edge services and technology at a faster pace and cost, or a cheaper cost, is much higher than a capability an organization would like to build. So pretty much it's a no-brainer that we can't run an organization without vendors. It's absolutely a hard fact in today's life. Probably 100 years ago it might be possible, but now in today's time. So that's how we are. And each of the vendor or service provider who we associate with will bring us an amount of risk also. And how do we manage those risks? That will define success of the organization, because organization want good quality services to be provided at a reasonable price. But at the same time, they don't want to get into a trouble of failure of internal control and many other matters. And hence, the governance over vendor got to be extremely high, as higher as for the organization, if not higher than that, for you to be compliant, because ultimately you are responsible to your own stakeholders from an organization standpoint. Essentially, the success depend upon effectively managing the risk of the complex network of third-party relationship. It's bringing a risk, it is bringing a value also. We got to drive the value, minimize the risk to an acceptable level. That's it. That's the bottom line when we deal with vendor. Now, if you were to really, view what are some of the leading institutes are talking about from a third-party risk management standpoint, and first and foremost is IIA. IIA is saying, apart from many other structure, it says that you got to have a risk management framework, you got to have a risk appetite statement, how do you deal with each third party, what kind of governance structure which will be there. And also it says that processes like sourcing, due diligence, contracting, monitoring, issue resolution, termination, etc., should be part of internal audit. Yeah. Then, as an internal auditor, we got to understand what is the roles, responsibility, and the risk which is being brought by a third party. Assess what kind of controls are being defined in terms of oversight on those third party relationships. Then what kind of internal audit coverage we would like to review as part of the internal audit of the area. And finally, what kind of scope and deliverable are there as part of third party review reports or any other report which is related to vendor. Similarly, these similar statements are being made by COSO 2013, AICPA and ICAI, wherein it says that you got to take into consideration the outsourcing risk and accordingly define your internal audit procedure. So in a sense, TPRM is not a special audit. It is indeed part of the internal audit, which all of us are doing. In whatever area you are auditing, you got to figure out what are the third party relationship in that particular domain, and whether the right level of governance from identification of vendor until termination is being followed or not. Example, lot of us might feel that only a procurement audit might have a vendor relationship, but it's not true. You pick any process of any organization from any, let's say HR, you will have a payroll agency. When it comes to marketing, you will have an advertisement agency, you will have franchisee, you will have distributors, etc., who are all, it's not a vendor in true sense, but they are all supporting you achieve your business objective, and hence we got to have an oversight on them because they bring their own set of risk. Now pick up a process like logistics. You will have a transportation agency who is helping you from inbound and outbound logistics. You pick up, let's say, finance and account. In finance and account, there are professionals who are helping the organization in terms of tax filing, in terms of GST reconciliation, in terms of, let us say, any kind of sub-reviews in terms of accounts payable, right? So each and every section will have an element of third party, and we got to map those out. When we draw a simple process map of any area, we got to be essentially talking about what are the touch point where third parties are involved, and then go down the route of analyzing what risk they are bringing in and how organization is mitigating those risks. I mean, that's the way audit should happen, rather than this becoming just a TPRM audit. You can still do a TPRM full-fledged audit, that's fine. But essentially all those elements got to be picked up in the respective audit areas while we define the audit scope, etc., so that we are giving a view on that particular area's risk to the management, and then those actions are being taken. And then all of those third party issues which might get identified as part of different process get rolled up as part of the overall TPRM framework if organization is having that. Then let us just talk about what are some of the actions which are required from an effective third party risk management. First and foremost is governance and financial as one of the big items. Under that, first element is contract legal vetting, and it's very simple. We have been entering contracts with third party vendors and service providers But if those contracts are not vetted by the legal in terms of what all are the acceptable terms in the contract, and if there are any deviation to the standard terms of the organization, then what kind of mitigation is being defined for us to accept those clauses. Otherwise, we will end up signing contracts where the entire responsibility would fall on us as an organization. And vendor would get away by saying that my liability is to the extent of the fee which you have paid me. Imagine a case for a large organization, a payroll service provider might get not more than 2-3 lakhs a month, meaning that a 36 lakh a year is the fee which we have paid. But the amount of data which a third party service provider is carrying, it is worth perhaps 100 times of the fee. But the liability is capped to only the fee amount, we will not be able to get anything out of it. I mean, apart from obviously having the framework, it's all about the damages which we can claim. So that's one example of how do we deal with it. And then all the other clauses with respect to confidentiality and, data privacy, and let us say right of audit, etc., is all part of the contract, which we will talk about as we go. The right of audit we just said. Then the criteria for evaluation of vendors' financial performance. When we deal with vendors for so long, we are highly dependent on them. If they fail, it will lead to significant disruption to our own business also. And therefore, imagine a case you work with two logistics service provider, business is split 70-30, and that 70%, the service provider, the vendor who is having 70% business, he is getting into financial trouble. If he is getting into financial trouble, he will not able to serve you. And it is not possible overnight for that 30% to build a capacity for you to serve 100%. And hence you get into a trap. And therefore it's important for us to figure out whether our vendors solvent in terms of serving us. And liquidity and past record is important. One is solvency, one is liquidity. Both are important. In the COVID time, it has been tested beyond doubt that organization might be solvent, but they didn't have a liquidity, and therefore they were not able to perform, and they had to obviously do a kind of shut the shop or do a mass layout, layoffs. So therefore, it's important that we take into consideration solvency and liquidity both from a vendor standpoint as well. Then, is there any payment default track record of the vendor or service provider who we are dealing with? If they have a payment default track record, they might get into a legal trouble with the regulator, or maybe a trouble with their own employees, etc. And hence, their operation is stopped, and our operation could also be stopped. Then, are there any instance of statutory dues default? If yes, the government can come on them, and then obviously their organization could be shut, etc. Then, other important element is the credit rating. Now, credit rating of an agency, you can, first of all, while onboarding, credit rating should be done. And then there can be a recurring way in which you assess the vendor's financial performance and liquidity, either through a rating or through other means, with the criteria for which can be defined by the organization. And somebody in-house can also assess on those parameters whether the vendor happens to be solvent and it has enough liquidity for him to continue to serve the organization. That's point one. Point two is the regulatory element. So third-party regulatory due diligence process needs to be followed. Wherever there are legal requirements, especially when you work with banks, financial services, and the bank, insurance, etc. There are very high regulations in terms of third-party due diligence process. Then, what kind of process vendor is having in terms of ensuring regulatory compliance? Now, even though he is providing service to us, we will not be directly responsible for their regulatory compliance. Having said that, if the vendor gets into a trouble because of regulatory failure, it will impact us indirectly, because there may be temporary or a permanent shutdown of the business, and hence our services will get impacted. Then what kind of market news we are having with respect to non-compliance? So when we do onboarding of the vendor, we got to figure out what is the public domain information about the vendor, and is there anything which you got to be careful about while you select a particular vendor. Then references from past client is extremely important. Clients will actually tell you more than what vendor is telling you in terms of his own credibility. Now, credibility is on paper, but the client voice is a real truth of what has been their experience in terms of the quality of service, etc. Then there are norms around cybersecurity and data privacy, which each organization got to follow. What are the position out there from a regulatory landscape standpoint? Then what's the market feedback on client complaints? Is there a trend of this organization is blamed for, let us say, human right, or in terms of health hygiene, or in terms of payout to employees, or in terms of unethical practices, whatever? All of those got to be assessed by us as part of the onboarding process, and then there can be a recurring update to it. Third element is the corporate responsibility. What is the labor condition and hygiene of typically this is for manufacturing largely. In a manufacturing setup, when we do a third-party contract manufacturing, we got to make sure that your third-party vendor is having the right set of labor condition and hygiene, energy and water consumption pattern. Nowadays with ESG coming in, the entire ESG compliance is the responsibility of a listed company, as we all know, the top 1000. But when it comes to the carbon footprint, it is generated not just by the organization, but their service provider also. That how do we roll up all of those? Because if he is not energy efficient, then let us say an organization has a target of carbon neutral by 2035, for example, they will not be able to achieve it. And hence those are being important. Then what kind of working hour and leaves being provided by the organization, quality of product which is being manufactured. In the West, there is lot of, when I say West means the Western world. In the Western world, US, etc., US and Europe particularly, there are lot of focus on quality of product. If there is any issue with respect to some kind of damage to environment on account of product being manufactured, there are counterclaims on that vendor. So same thing is going to happen in India, but not now, maybe a couple of years down the line as ESG starts to stabilize. Then the workshop on to improve employee awareness. Is there any such process which is available from a corporate social responsibility standpoint? Now, corporate responsibility, now it's getting more flavored because of the ESG, and hence it's being broken down into the three pieces of E, S, and G. G we all understand, most of us. When it comes to social, is all about the social way of handling impact on society, etc. Not by us, also by the by vendors as well. And then E is the environment part of how environmentally responsible we are in terms of carbon footprint, in terms of water consumption, and all the other aspects. Whatever target we set for ourselves as an organization, similar set of targets got to be aligned to the vendor for us to achieve those targets. That's the bottom line. Fourth element is resilience. Now, when we say resilience, we want, in our organization, there are a lot of processes around BCP, DRP, mock trains, and so many other stuff. But if the similar thing is not there at the vendor, we will not be able to our own BCP objective. Right? There is something called RPO and RTO in a BCP terminology. RPO, RTO got to be aligned with the vendor RPO, RTO. Otherwise, we would be thinking that we did all the good stuff, but if vendor fails, we will not be achieve the target which we have set out for us from a market standpoint. So business continuity and disaster recovery policy existence at the vendor. What kind of leadership commitment is there? BCP. Do they have BCP DRP tools? Is there any awareness and training which happens on these things? Are there any alignment, which I was talking about, alignment of recovery time as per the parent organization? If your recovery time is 6 hours and vendor's recovery time is 12 hours, we are not aligned. And hence, either of us needs to align in terms of either parent organization go and change it to 12 hours if it is acceptable, or they will ask the vendor to align their processes to the 6R model. Then, is there any alternate vendor to maintain continuity? When you depend upon a single vendor, we call it a vendor concentration risk. In a vendor concentration risk, the biggest issue is our success is very, very closely linked to the vendor success, vendor's performance. If he fails, we will also fail. And therefore, there are organizations who have an unsaid rule. We would have a minimum of 3 vendors. Irrespective of the price, we want to have distribution of business 70-20-10, L1, L2, L3, for us to have a backup plan available. If that 70% vendor fail, we will try using 20% vendor to the extent he can scale up for us to at least be in the market. Otherwise, we'll be off the market because the vendor is not able to maintain performance. Then EHS, we were just talking about the ESG, so the E has come now. What is the environment, health and safety related policy procedures of the vendor? Are there any issues in terms of compliance in the past when you have onboarded the vendor? How do they deal with hazardous material, and there are norms around how do we dispose of, etc. Is there any training which is happening on EHS to their employees of the vendor? Are there any logs being created of critical accidents? How do they handle it, and what kind of reporting mechanism they have within their organization, and how do they provide information to the parent organization? Both are relevant. Then, is there any periodic dashboard of EHS compliance which vendor is maintaining and it's being passed on to us as a parent organization? You can always define all of it as part of the contract if you are carefully aligning those as part of your contract obligations. Then next element is intellectual property. Whatever information we are passing on, it's all the IP of the parent organization. So we got to deal with identifying which all information you need to have an IPR and their IPR registration process and all the other compliances. How do we deal with the IPR? What kind of norms are there in terms of IPR compliance, cybersecurity related practices at the vendor place? Then restrict IPR related information to only select third party who are being highly credible. Otherwise, we end up sharing information with not so credible vendor, and we would get into a trouble when that vendor has, let's say, misused your information. And then we get into again legal battle, which is very difficult to continue and win in an Indian context. As we all know, it can take anywhere between whatever 20-30 years for us to settle a case. And then from a vendor standpoint, we go to review SOC 1, SOC 2 reporting, which gives a view on their internal control and assess what is the exceptions, if any, brought in by the auditor on SOC 1, SOC 2 reports, and then whether those risks are acceptable to us as a parent organization. Then next element is billing and performance. In the billing and performance, the most important aspect is the service level agreements. Service level agreements got to be very, very well defined for us to avoid any ambiguity, number one. Number two, we got to define measurement and work completion guidelines. Some of the contract work sometimes is vaguely defined, and therefore vendor is saying 70% complete, we are saying 40% complete, and there is a dispute. So you got to have a clear criteria on which work measurement is going to be assessed as part of the contract itself. Then somebody needs to independently review SLA compliance, and SLA compliance should not be reviewed by the user department. It should be somebody independent, because user department has an interest to deal with that vendor sometime. And hence, if anybody independent of user, it could be procurement function, it could be compliance function, whatever, that's a good thing. Then we got to also review as part of our process the key compliance to vendor onboarding in terms of obtaining a bank guarantee, in terms of letter of credit, security deposit, or whatever which we have defined. It's not just defining for the sake of defining, but also ensuring that those are being there. Because if BG is not let's say not obtained from the vendor, and we gave an advance, what is the recourse we have? Nothing other than going to civil court, right? And then any payment which is going on to the vendor and also advances got to be strictly in compliance to the contract in terms of how many advance, in terms of percentage which can be granted, and also whether the payment is being made after completion of all the delivery milestone. It can't be that somebody is making a payment without satisfying delivery milestones, and those delivery milestones got to be checked by finance, most likely finance. It could be some other function in the order. Then the last pillar is integrity. Now, in integrity, a lot of organizations today are under an obligation to comply with anti-bribery norms. It could be FCPA, it could be GDPR, it could be India anti-corruption law, and whatever else we are talking about now, which is yet not finalized. Yeah, so anti-corruption policies and procedure, whether they have defined policy procedure, anti-corruption compliance monitoring mechanism, then periodic tracking of third-party compliance to those norms, whether vendor is complying to the code of conduct defined by the parent organization, generally organization call it a supplier code of conduct. What kind of reporting mechanism is there if there are any ethical issues, and also background verification of service provider staff. Let me just give you an example. Let us say if you're a school, you are hiring a housekeeping agency, an agency is deploying a staff team. Imagine those 40, 50 housekeeping staff in a large school is the biggest risk you carry, unless otherwise there is a background verification of the staff and you're satisfied that they do not have any adverse background in terms of criminal, in terms of whatever other history. And those needs to be done for the employees who are coming to your organization. Sometimes there are replacements. So whether background verification is done for replacements also is important, not just for some initially we have done background verification, thereafter a lot of people have changed and we haven't done it. So this is also important because the risk is not just of the vendor, but the people who are deployed by the vendor. So it is like a fourth party. If you were to put, there's something called TPRM and there is something called a fourth party risk management. This is the fourth party. And in a vendor context, if he is subcontracting services, then subcontractor is a fourth party for us. And we got to be complying and checking compliance with respect to anti-bribery, etc. for the third party or a fourth party as well. Okay, let's just talk a little bit on cyber, and may I request Yukti to pick the slide up? I'll just display Yukti. She will talk about what are the pillars or a third party from a cyber standpoint. Yukti, over to you.
Yeah, thanks, Mukesh. Mukesh has covered the basic elements which are required in terms of vendor risk management. On the cyber side, as Mohit also introduced the topic and Mukesh was also speaking, that there is lot of outsourcing, and specifically on the digital side, as well as like when we connect to the vendors, we connect in some or other digital mode and we exchange lot of information, including data. There are access to the tools and technologies which are provided. And therefore, one of the key pillar for the entire vendor risk management is the cyber and the privacy risk management. And fundamentally, it starts with having a good cyber risk governance framework for the vendor management. Because what happens is like when we are exchanging information, when we are giving access to the services and when they are providing services through our portal or through their own applications, there is actually the risk and the responsibility lies with the company itself. So there need to be a proper mechanism to govern that and to decide what, first of all, what information, what system we should be providing and using, and the governance around those system, how we will be managing this thing. It is extremely important to also have a very, very good understanding of various aspects, specifically by laying down the policies and procedures and plans of how the services are to be provided, what types of checks and controls are required from a cyber point of view, how the user access has to be provided, how we ensure that the data is taken care of by having proper mechanisms of encryptions, connecting through a secured manners, and providing them various mechanisms through which they can log and provide information, mechanisms to address if there are certain customer grievances. So all those like things require a very, very well-defined policies and procedures and clear roles and responsibility. Which responsibility is owned by the company, which is the shared responsibility, and what is the responsibility which is outsourced, and who is actually the party who is responsible. Many times what happens is if this responsibility is not well defined, nobody takes care of it, and at the end it becomes a very, very high risk for the organization. Also, it is extremely important at the beginning of the engagement itself to have a proper mechanism of measuring the ways in which the services are going to be defined and also measured. So laying down very transparently those mechanisms of or measures which are properly known as software level agreements, wherein what is expected in terms of performance and how this performance is going to be measured, how this performance is to be improved, and how we are going to deal with it. So laying down those like mechanisms of reviews and also measuring as one of the fundamental governance pillar which should be established while we are doing this outsourcing. Also, like many a times there would be certain incident, and we have noted in past most of the cyber incidents have either been through an employee or through the third party of softwares, or through the APIs which we connect to the third party softwares, or through some or other mechanism. And many a times the responsibilities have come to the third parties who adopted a substandard systems or who adopted substandard policies, procedures, or whose systems were not as hardened as the company's organization system, or they were certain weaker, like employees within the organizations were trained, but then the employees outside the organization, specifically the vendors or the extended employees, they were not trained. So it is essential that we have those types of mechanism to very, very quickly report any incident if any of them has identified, to say and lay down the mechanism of escalation and put it in perspective. Also, like data protection, data is something which is very, very important for any organization. In fact, the strength of the company, biggest asset of the companies in current day world is the data. And if we are able to use that data well, I think the companies are able to grow at much faster pace. So it's essential to protect the data, not only from the perspective of the aspects of like confidentiality and integrity and availability, but also from the perspective of growth and efficiencies which can be brought in it. So having a proper inventory, understanding the data flow, laying down which data is going to be available with whom, who is responsible for monitoring that particular type of data, who is responsible for ensuring the integrity, availability, sensitivity, as well as confidentiality of the data. It requires a very, very good inventory and classification. Also, it requires a very good protection in terms of various tools to ensure that data is properly like taken care of the moment it leaves the organization and the moment it comes into the organization from an integrity perspective. Privacy is one of the fundamental, because it is the trust which the organization, customers, vendors, employees, and the whole society plays when they are sharing the information. So it is important that the companies develop a good privacy models. They do a proper risk assessment on the privacy, understand the critical data points, specifically the personally identifiable information, and lay down the mechanisms to have a proper either encryption, anonymization, or means in which it can be dealt with in a secure and private, and the privacy can be also honored. And if the customer requires or vendors requires, the employee require that data to be removed, that data can be handled in a proper manner. So it requires both at the company and the vendor element to address these types of things. Also having a very, very good flow of data diagram and specifically identifying which data at what level, at what like aspects is with the vendor, what is editable, not editable. And also in the current day world, when we are talking about audit logs and informations are being available with the data, doing this data flow and understanding where the logs will be available for that particular information, which may be financial information, may be an important aspect to be considered. Then having a good data access management, consent management, removing the data when it is not required. Sometimes what happens is the request comes to the company for removal of thing, but the access to the data and the entire management is outside the organization, or it is hosted on a cloud where there is no ownership of that in the organization, and the vendor has not put those types of mechanism. So it brings the organization to the privacy regulations and non-compliances. So one of this very important aspect when we are outsourcing and during the whole process is to keep on doing this data protection assessments from a perspective of privacy and the cyber point of view. Another important aspect, which because we see quite a lot of virtual infrastructure, we see both like information as services, infrastructure as services, and then the entire platform is also as services, softwares are as services, and there is a whole lot of like infrastructure platforms and those things which are on cloud. Now, when we are on cloud, there is a huge dependency on the cloud service provider. So having a secure channel of communication, having a very secure channel to connect with them, maintaining and ensuring proper mechanisms of data, which is information or the connection which is coming in and moving out, is one of the fundamental things. So having a very good due diligence on the cloud provider selection, configuring those cloud services in with a proper mechanism becomes fundamental. And so if one has to evaluate whether they are configurable, or one has to design it, and if one has to define and design and get it implemented, then it is better before onboarding we take those initiatives and give it to the vendors, and the vendors are able to provide that. Then various like segmentations, micro segmentations, subnet, firewalls, etc. needs to be established. So all these assessments should be started before, and they should form part of material assessment, and as decisions should be based on that. Otherwise, later on, once we onboard them, it's a costly affair to onboard any vendor. And also like, it's not about the value you are paying. It's about the information which you are exchanging. As Mukesh also mentioned, it is not about the like decisions of like getting into it and just trying on trial basis. It is about like the effort which is being put in getting those vendors. So therefore, a very good assessment is fundamental, specifically on the infrastructure side and hardening those infrastructure and the virtual connection. And once we have good governance, once we have laid down good policies and procedures, having a clear identification of who's responsible for what, and then having a good like service level agreement, incident management, data protection, data flow diagram, and securing the infrastructure on the cloud or through various ways in which the service provider is servicing, one needs to be always be vigilant. That means one has to always understand and comprehensively like look at it, whether the services are as per that mechanism, have reviews, reports, trails, various types of log review on regular basis, ensure that the services are always like secure, there is no breach, and specifically the compliances to the service level agreement on the cyber side and privacy side are also being met of. And one has to always keep up with the elastic environment, keep on ensuring it's not one like thing. Maybe we'll have to expand, or maybe we'll have to reduce the types of services to keeping that is also fundamental. Having a good like mechanisms of managing the SIMs and various types of ways in which we are connecting is another important aspect. And in fact, the security thread should be built throughout the life journey of the vendor, and entire life cycle of vendor risk management should be fundamentally embedded with the cyber security and privacy, considering the extent of exposure which is there in this like thing. So this is a brief, like Mukesh, you may carry on further.
Thank you so much, Yukti. Now, since we talked about what all actions are there, let us now get down into what kind of potential fraud which happens, and we pick topic by topic. First, we call it a bid rigging. In a bid rigging, there is an attempt to do a lot of things to benefit a particular vendor or a service provider. For example, the RFP itself is circulated to very few vendors. Number two, very short time is provided to respond an RFP. A 300-page RFP, 3 days is provided, for example. Then, bids are opened before the bid opening time. So that's another indication of there is an attempt to benefit certain service provider. Then bid submission timeline itself is not defined. It's an open-ended. Unless a particular bid is received, you will not close the bid. So which means unreasonable time being provided to some set of bidders. Then bid clarifications are not submitted to all the bidders. So if there is an ambiguity on scope of work, the clarification is provided to only one of the vendor, and he is at an advantage, and therefore he is able to bid it right as compared to other bidders. Then multiple entities are enrolled by the same vendor just to meet that 3 quotation kind of formula. And when you go down to their ownership structure, you will find either their partners or directors, etc., are common. Then proposals are accepted after the due date and time. There is a cutoff. After cutoff, proposals are accepted, and invariably you will find those who have submitted the proposal the last, he is the winner. Then trends of bids received on individual buyer's ID and not to the whole, let's say, a procurement committee. Imagine a case, there are 3-4 buyers, and then finally there is a committee. That particular buyer's ID quotations are received, he has not placed it because of vested interest, and therefore organization feel that only there are 2 quotations, but in reality he got 4. Then splitting of bid to avoid approval from higher authority. This sometimes happens in, let us say, in a very tight structure where the thresholds are defined in a way that a bid beyond, let's say, 50 lakh go to head of procurement. Beyond that, it goes to, let us say, an MD, CFO, etc. In that, they continue to split the bid into various. So you will find one work, there are 4 different pieces of scope being carved out. If you put together all of it, the value will go beyond the approving authority. So that's one way in which, through the bid rigging process, you can benefit a certain vendor, and then it is a defrauding to the other. That's one. Secondly, when we do contracting, in contracting, critical clauses are relaxed. For example, indemnity, vendor will not indemnify you, or their limitation of liability. Like I said, that liability is limited to the fee amount, but the data we exchange is 100 times of the value of the fee. Then confidentiality, data privacy, anti-bribery clauses are intentionally being relaxed for certain set of vendors once it is being selected. So non-adherence to the bid document is an indication that there is something wrong. Then scope creep is a very, very good indicator for us to see what's going around. You will find for certain set of vendors, every time there is going to be multiple scope revisions. And when you do scope revision, there is no negotiation. He has quoted a price, you have accepted it. Original contract value was 50 lakh. Through the 4 scope revision, the contract value has gone to 2 crores. And therefore, in that 1.5 crore, you are not sure whether the work is a 1.5 crore or only 50 lakh rupees. Since vendor has started a portion of work, it is the fresh quotations are not obtained, and then you will continue to add the parts into the scope, and the fees continue to increase. Then conflict of interest. And what are the indicators in a conflict of interest scenario is bidder is recommended by the user department. User is saying, please go and take a bid from this. Why should we do that? There has to be a right structure of how do we identify potential supplier and then request for quotation. Then single source buying of a very, very competitive item. In today's world, there are minimal items through which we require a single source. if it's a proprietary item, we do understand, but not in all cases. But if you find a trend of single source buying of the common item, it's an indicator that there is an attempt towards defrauding. Then declaration from procurement user or procurement committee not obtained for they being independent of the vendor. And similarly, declaration from vendor that anyone is related in the organization is also not obtained. So which means they are also not committing on record at least that they are not related to the vendor or vendor is not related to anybody in the organization. That's an important one, because when you are trying to benefit a certain vendor, it could either be for exchange of value or it is because of the relationship. Either a related party or somebody is a relative of procurement, somebody is a relative of a CFO, etc., etc. Conflict of interest is extremely important for us to avoid vendor fraud. In price revision, you will sometime find a price is being revised during the tenure of a valid contract. It should never happen unless otherwise there is a carve out in the contract because of a commodity price. If it goes beyond 10% up down, there is going to be a revision. Unless that clause is there, if you find any revision, it's a clear case of benefit is being provided to a particular vendor. If a price revision happens, there has to be a fresh quotation of there is a change in market scenario, which is why we are going and revising a price, which is highly exceptional event. Then contract extension. Contract is for 1 year, let us a service contract. It is being extended year after year after year without involving procurement process, without having fresh price discovery, is another indication of potential fraud. Then payment terms. Payments are either made first. Normal payment cycle for organization is, let us say, 30 days. We have invariably agreed with vendor for 10 days. That's point one. Point two, we agreed for 30 days, but we have always been making payment within 10 days, 15 days. That's another indication of this vendor is being given a preferential treatment as compared to some of the other vendors. Okay. Now, these are some of the indicators which will give you sense of something going wrong. And similarly, there's another red flag which we are talking about. Same set of contractors is bidding for each product or each project every single time. That's trending. That trending should help us understand that there is a problem, and then you go down the route and analyze, and then potentially it could be a fraud. Second, all contractors submit consistently high bid. Your expectation was that this work should happen in 20 lakh, everybody is submitting 50 lakh rupees. It is potential case of collusion. Qualified contractors do not submit the bid. I mean, it is highly unlikely if somebody is qualified, he should be submitting a bid. If we are not doing, if that bid is not submitted by the contractor, there is an issue. Now, issue could be the contractor RFP sent to contractor intentionally there is a spelling error in the email, and hence the email bounced. It has never reached that contractor. Point number one. Point number two, RFP sent via a physical dispatch, but the dispatch never happened. Then winning bidder subcontracted work to losing or non-bidders. That's another case of there is a collusion between the two, and they said that please don't bid. You are bidding at 20 lakh, I will bid at 30 lakh. What is the differential of 10? We'll split 5 each. That's another way to look at, it could potentially be the case. So I'm not saying that all of this is a fraud. It's an indicator. You got to go and investigate further to figure out whether it is a fraud. Then bid other than bid, winning bid is poorly drafted. Now imagine a case, everybody's in a business. So bid will come in a right way, meeting all the criteria, right documentation, right supporting, no correction, duly stamped and signed. This is how bidding should happen. But if you find a case where only one bid was sensibly prepared, all the other were poorly drafted, it's another case of collusion. Then fewer competition than usual bid. Normally we get 5-6 bids, but invariably you find a trend of only 1 or 2 coming in. And if you just go down the route, those 1 or 2 are consistently bidding for all your requirements. Then there is a rotational pattern of winning the bid. In Delhi, Mr. X, in Mumbai, Mr. Y, in Chennai, Mr. Z, or whatever. So there is a pattern being established. That pattern is that vendors have colluded and then they are taking turns. Either they are taking turn in terms of geography or they are taking turn in terms of type of work, etc. Idea is to minimize competition. Then bid specification and statement of work is intentionally drafted so that only one will be eligible. The criteria is so tightly drafted that they know it is being done for, let us say, L&T, for example. I'm just giving an example just for you to understand. A large contractor, we are talking contractor, it is intentionally being done that way. So therefore, competition is eliminated. Then evidence of collusion of bids. All the bidders are making same mathematical or spelling errors. All bids are being prepared using same material, same type of paper, same handwriting. That's another indication of collusion. Competitor submits identical bid in all respect. Everything is very, very, it's like if details are there, detail in so many words, so many paras, so many papers, etc. That is what we should be careful about while reviewing it. Then high number of competitive award to one supplier. All the quotes are received, but you will invariably find 70%, 80% award is to one supplier. How is that possible? Somebody needs to go and analyze. Then specification is developed in consultation with a contractor, and who is then going to be the contractor selected, which means there is a deliberate attempt to give all the information to that contractor. He get all the insights, and then finally he is being awarded the contract. Then despite receiving fewer bids, rebidding is not done. So we have decided to go ahead with only 2 bids. Out of 2, 1 was not sensible enough and it's being awarded to 1, and that's it. So which means we got it at a higher price. Invitation for bid are sent to contractor that previously declined. Now, generally, if they have declined that you don't want to work with the company, why would we submit a bid to those contractors? That's another trend of they are just trying to fill the criteria of 3 bidding, saying that we have contacted 3, 2 were declined cases earlier, only 1 was eligible. He got the bid and he has been awarded. So these are some of the indicators. Now, I am not saying any of these will crystallize in fraud straight away. It is going to give you a pattern. Most of us in procurement audit are only concentrating on whether quotations are there, whether comparatives prepared, whether L1 is selected. That's it. Matter closed. But the reality is the process below is extremely relevant. Who is deciding who to send the quotation? Whether the information is provided to all, whether information is timely, whether bids is rightly prepared, whether criteria is correctly defined, whether there is a support being taken from external service provider, whether we are getting a trend of last minute bid submission, whether we are getting a trend of bids are submitted without a password, okay, or there is a price compromise, whether the bids are being received but not placed on record. These are all the pattern which we should be really thinking about for us to do any meaningful analysis in a vendor risk scenario, and then come to a conclusion of whether internal controls are effective or ineffective. I mean, that's the way we should be going about it. We can go on and on this topic because this is a topic which can probably be discussed for another 5-6 hours also. But given that we have almost crossed 2 minutes post noon, we can take a pause here and pick up the questions, if any, and then conclude the session. Okay, any question? I'm just looking at the Q&A. In Q&A, okay, any popular tool used in the industry? Now, so the point is e-procurement system, which government is also using nowadays. It's a good tool which will probably control a lot of these things in terms of bid confidentiality, timing of the bid, and all of it. So data is being preserved into the system as per the criteria being defined. Once that data is submitted, then it is being provided to procurement committee for us to analyze. I mean, that is one good way to look at, but it can't happen for all type of procurement. It can only happen for a select procurement type. Okay. Yeah, Yukti is typing, I think, an answer. So we'll wait for her. Any other question anyone has, you can unmute and speak. See, tools are available in the market, but the human intelligence and analysis of how this whole journey has gone is very important. Even within the tool, imagine if you are feeding an incorrect data, if bids are only going to 2, what do we do? In case of favorable payment term to vendor, then at what level auditor can conclude it as a fraud? You got to ask question of why this is happening. If the question of why is not confidently answered by whoever has made the payment, it could then be termed as a fraud. Obviously, there needs to be analysis around why somebody has made the payment. Is this a pressure? Is this somebody is related to the company, etc., etc.? All of those answers needs to be obtained for us to conclude it's a fraud. I know there's one hand raised. Let me just answer one more question and then I'll come to you. How easy or expensive it is to hold reverse bidding process? I mean, there is a tool. In the tool, you can bid. It is an online bidding, reverse bidding. You can say this is the lowest, and finally whoever wins is going to be selected. Reverse bidding is possible. You got to have a tool around it. Okay, what data analytics can we do on vendor master? You can perform vendor master analysis in terms of PAN, in terms of GST, in terms of address, in terms of type of material, how many vendors. Then go to the different websites, for example, MCA website, to figure out relationship of those in terms of directorship, partner, ownership structure, and then try to analyze. For example, for one type, there are 6 vendors, but when you go to their ownership structure, you find there are only 2 owners who are playing around with these 6 entities. That's another analysis that can be done. Address is another one. Registered address of the companies will give you a lot of indication, because generally you will not find a common registered address. So that's the kind of analysis which is possible. Okay, can we get recording of the session? I will leave that to Yukti to answer. There's so many questions. I know there's a raise of hand also. What is the best way to ensure the different vendor name do not belong to same set of owners? You got to do an ownership search based on public record. It could be from MCA for a company. It could be other public record. And in case you have a doubt, there are agencies who will do these jobs. Okay, vendor do not provide proper compliance to PFESI. It's only a repeat observation. Company is a principal employer with action. There is now a requirement as per the new regulation that principal employer needs to get the data uploaded on PF tool about who all employees are working with us and when is the payout being done. So now it is an obligation on principal employer, and you got to ask your vendor to upload the data. So that resolves the query. Kindly share link. Okay, we can skip that. Can we get the presentation? So common one. Is it possible to verify all the contractors, since in large organization having few number of contracts, is it not possible to verify? No, so you will not do verification for all contracts. You follow Pareto principle, 80-20. On 80-20 you do, and then analyze, no worries. How to identify vendor favoritism? There is no formula. You got to pick those trends. Basis those trends, you come to an analysis of 80% of RFP is won by 2 vendors. Now, go down the route, you will find there is a case of vendor favoritism. Vendor audit should be also conducted by now.
In interest of time, I think there is one raised hand by Mohammed.
I am
so
just
Mohammed Kuti, you can raise your hand. And you can just unmute and quickly ask, and then we will. And in the meantime, we have given the feedback form. I would request everybody to fill that. Yeah, Mohammed, you can unmute and speak.
We are sorry you were raising hand, but there was a lot of questions. I thought, let me just answer it. Yeah, please go ahead.
No problem, sir. Thank you for this very insightful presentation. Thanks a lot. I have two queries. One is I would like to know from your experience, is the practice of taking conflict of interest declaration from a vendor that there is no conflicting situation and there are no employees being having ownership interest or any other interest in the vendor firm. So is it a normal practice to take conflict of interest declaration from vendor? My second question is
In large organization. Yeah.
Yes, sir.
Go ahead.
Okay, sir. My second question is, procurement policy says that you should obtain 3 to 4 quotation. However, the procurement department says, no, we have so many years of experience. We have been dealing with suppliers, so we know which are the best suppliers. So we are directly dealing with the one particular supplier. We are not preparing computation or calculation, or we are not seeking quotation from different suppliers because we know who is the best supplier who can meet our requirement. So how in your experience or in your opinion, is this justification from procurement department, is this justifiable, or they have to follow the process, policies, procedure, and they have to obtain quotation and do an analysis, documented analysis to select a vendor? So I'll appreciate if you can advise on these two.
Understood. Yeah. So on the first question, conflict of interest declaration, large companies obtain declaration from vendor that nobody is related working in this organization. And also they are obtaining declaration from their own team who is part of the procurement or selection process that vendor is not related to them. Now, technically, employee can lie and vendor can also lie. But then there is a responsibility being cast upon employee and the vendor. And we also say in case anything is falsified, you will be debarred, right? So there is a moral pressure on him to be careful about those. That's point one. Point two, when procurement says we know the vendor, see, that's okay. But the bigger point is how are you doing price discovery? That's a fundamental point. If price discovery is done, then we are satisfied. If you are saying there is only one vendor who's capable, then you need to ask question, go to senior management and ask question, on what basis you are saying you have got the best price? So it has to be drilled down. Every procurement will say the same thing, that I know the best suppliers. If they know the best supplier, then how are we documenting that this is the best price on which a product or services could be procured? So there has to be quotation, and there has to be quotation with the eligible set of suppliers who are with that level of stature. It can't be one is from A grade and one is from C grade. Invariably, you will find the gap. But for the right set of people who have the competency and experience, you got to have a minimum of 3 quotation to arrive at price discovery. If they still don't want to do it, let them give a justification and approved by management that we want to go for a single source. Hope this clarifies.
Yes, sir. Thank you.
Most welcome.
Thanks. Like we will just now I know there are many questions which are coming, but thank you everyone for joining in on Saturday. 11 to 12 Super 6 series, and it has been a wonderful discussion, Mukesh. Thanks for accepting this offer and providing us your valued learnings to all the participants. And thanks to IIA India and all the Sana and Bharat and all those people who were Mohit that contributed in putting it together. And we look forward for the last session on the Super 6 series on the ChatGPT next week. Thank you everyone for joining in. Please, I would request to give the feedback. And you all have been wonderful audience, asked wonderful questions, and it has made each one of us learn in a better way. Thanks a lot. Thank you.
Thank you. I think I have answered most of it. 1 or 2 I have typed it just now. I hope everything got answered. If you still not got answer to it, maybe you can write to IIA and we will get those answers sent to you.
So we'll formally now end the session. Thanks a lot. Thank you very much.
Thank you, everyone. Thanks. Bye-bye.